Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the mother effing Dividend Diplomats. This has been an exciting week in the stock market. We are talking the week of October 30th, Halloween week, and we are going to cover 5 big time stories that have happened this week. So buckle up, everybody. Get ready. We can't wait to share our thoughts on the major news from this week.
Guys, before we dive in, hit that subscribe button. Give us a nice thumbs up on this video. Thank you again for 18,000 subscribers. Now we got to get to 19,000. But Bert, funny, interesting last few days here in the stock market. A lot of big headliner news has hit the fan here. It's been a pretty green week, if I can say so myself.
Yes, it is, and it's shocking how fast the market can turn. Just like that, takes what 5 lines from Jerome Powell, and the market just shoots through the roof. We'll maybe have a little bit more on that later, so we're not going to cover too much of that here. So, Lanny, let's jump right in here. Let's get ready. Let's talk about that first story because this first story is a major acquisition news that kicked this week off in style. What company made the announcement?
It's magic. Guys, Realty Income, ticker symbol, acquires Spirit Realty for 9.3 billion in stock, and that ticker symbol is SRC. Guys, big acquisition from Big O, the monthly dividend income payer.
Yeah, people did not like this acquisition when it was first announced. The stock price went tumbling. When you peel back the layers, you see why, though. It's an all equity transaction. So it's a $9.3 billion all in stock. It's going to be newly issued stock for Realty Income. So after this, they're going to own 87%, I believe it is, to 13% of the thing. So current Realty Income shareholders, you are getting diluted a little bit. But the big highlights that everyone wanted to highlight, they're not taking on any new debt. They're still managing their debt load within the company's guidance and the limits. So this is a really debt neutral transaction to the company. And that was kind of the one of the big positive spins that they had.
Yeah, I mean, leverage neutral is huge. Supposed to add more than 2.5% to adjusted funds from operations. The merged company is going to be really 87% owned by the Realty Income shareholders, and then the remaining owned by the SRC shareholders. Now, again, SRC is pretty big, own over 2,000 properties, almost at 100% occupancy, 99.6%. They've got some names that we all know about: Lifetime Fitness, BJ's, the David Busters, Church's Chicken, Circle K gas stations that we see here in Northeast Ohio pretty heavily. Own a lot of Home Depot properties. Again, very similar to a Realty Income setup.
Yeah, and that was one of the other big quotes that I saw pop out of there is they're going to help diversify the industries that Realty Income is in, but it's also in the same type of property in the same niche. So there's just a lot of potential synergies here for the companies. Obviously, there's room to see what's going to happen. How is this going to shake out? Is this going to be as accretive to earnings to FFO as management is saying? It's going to bring potential revenue up from 3.8 billion to 4.5. So it's not that heavy on the revenue side, but it's going to strengthen the portfolio allegedly. Time will tell.
I'm just waiting on my boys over at Broadstone Net Lease, who just increased their dividend, to start being targeted soon. But we'll have to see, guys. So congrats to all the SRC shareholders, and congrats to all the O shareholders as well for keeping and retaining the entity. I have no doubt in my mind that monthly dividend income will be just fine.
Yes, I would agree here. So let's move on to story number 2 here. Also, before we do, let us know, that's our big story for the week here from there. Let us know what your thoughts are about the big Realty Income acquisition in that comment section below. I can't say number 2, Lanny. You say number 2. You kick this off, Chico.
Guys, we're talking Aflac. Bert, let me hear that Aflac. Come on.
Aflac.
There it is, guys. They came in to start up that 2024 dividend announcement, increasing it a whopping 19%, going from 42 cents to 50 cents per share per quarter, guys. Gotta love insurance companies, when you beat and you earn and you grow and you outpace what your expected claims are. Solid performance.
Yeah, they beat them on the top line, they beat them on the bottom line, and then they took the shareholders and they said, here you go, chicos, take some extra coin here. You've got this one covered.
Yep, guys. So Aflac keeping that aristocrat status, no doubt about it. But 19%, huge, guys. In this lower dividend growth era that we felt like we were going through, it's always nice having some high dividend growth players like Aflac.
That's it. And that was such a big dividend increase. We had to call that out for our second story.
Yeah, and guys, before we do, that did add almost $100 to my forward income alone with just that one increase. So that is why you own aristocrats.
Cha-ching. Let's freaking go, Lanny. All right, number 3. This isn't one individual company, but let's just talk about what's happened in the last week.
What's happened, Bert?
Have you noticed there have been a lot of really strong earnings releases over the last week, Lanny? There's been, of course, every earnings season, there's good news and there's bad news, but I just feel like this last week, the good has significantly outweighed the bad. Just list off these names. Starbucks crushed their earnings and their stock price went shooting up after the fact. Qualcomm, CVS, PayPal, Shell, McDonald's last week. I mean, so many great companies, Lanny, just boosting up those earnings and those results. It's good to have some positive vibes in the market.
Positive vibes, including Paramount, ticker symbol PARA. Yeah, it's fun. It's fun seeing kind of, again, expectation bars were set very low in the previous quarter, which allows them to really overdo it on this quarter. That's a good old management tactic, as Bert knows, and we've talked about it on our last few videos, guys. So strong earnings. Now, Bert, strong earnings led to some possible strong green in the stock market this past week. And the question is, did something else have something to do with that?
Yeah, that's where our boy Jerome was like, here you go, shareholders. Here you go, equity holders. We're going to give you a portfolio. It's a little boost here. Because for the first time this year, would you say, Lanny, the Fed started to give signals that they were wavering on their future interest rate increase. This was the strongest indication yet that rates are going to stay the same, or even possibly a decrease faster than we're expecting, Lanny.
I mean, inflation's still high. I think what it does is probably says we might have topped out.
Right.
So the pricing of an increase is probably off the table. I still think that they have no idea what's going on. That's just me and my own vendetta.
Yeah. Yeah. No, I agree. And that's the thing. Think about what we just talked about, Lanny. Think about it, that strong earnings everywhere. It's counterintuitive that you hear such strong earnings releases, strong growth, so much going on. But then on the other hand, are the rates stopping? Is the inflation going to cool down? It's just a mixed signal. I think you said it best. It's just, they might not even know what the final answer is. That's what's
yeah. My take is this. It's like, what are they gonna say?
Yeah.
It's like,
yeah, I mean, why would you give anything meaningful? Like it might go up or might go down. Like,
yeah. So they're not going to say one way or the other. But what they did say was, well, inflation is still well above our target.
Yeah, I'm with you. It's a no-win situation, but the market took the news as strong. That's what they wanted to see. Equities pop back up. And I think that will be a good, we're going to pause that conversation there because we're going to have a video that's released tomorrow. We're going to kind of touch on this one a little bit more. So we've gone through 4 stories and I said we have 5. This one's just a fun one. This is a fun bonus one. Lanny shook his head when he saw this one on the list. But we're from Cleveland. We're not that far from Cedar Point, which is owned by Cedar Fair. They finally announced the merger that's been talked about for years, where Cedar Fair acquires Six Flags to form the massive amusement park merger. So that's really all the story is. A lot of amusement parks, Cedar Point, Kings Island, they have 20 something. Six Flags has 20 something. They're going to be not 20 something each. It'll be 27 combined amusement parks. They're going to be able to share resources, share the IP that Six Flags owns. They're going to integrate it into the Cedar Fair stuff. Just fun times. That's really all. It was exciting to see. That's all. Nothing more to it.
RIP Six Flags Aurora, Ohio.
Yeah. Yeah. I know that was fun. We used to have season passes there when we were younger. We would go. Yeah.
Same. Had
Yes.
it for probably 3 years running.
It was a great value. That was one of the better ones. The combined Six Flags SeaWorld in yeah. Oh, that's a trip down memory lane. So all right, everybody, those are the 5 stories. Realty Income acquires Spirit Realty. Aflac just freaking crushes it with a 19% dividend increase. Strong earnings everywhere. Jerome saying, eh, maybe we're done. Maybe we've topped out. Maybe not. Stock market shoots up. And Cedar Fair acquires Six Flags. Those are the big 5, Lanny. What are your thoughts?
Guys, yeah, my thoughts are keep saving and keep investing. What do you guys think was big this week? Let us know in the comments. Let us know what caught your eye, what stock you feel like is still undervalued. Again, this is Bert and Lanny. We keep bringing you guys the news to hopefully help you make better decisions. Bert, any other parting words for our dividend investing community?
You're not with us. You're against us, Jack.
That was Bert, the Heart Man, and Lanny from the DD. Over and out.